Good afternoon, students. Today we discuss about 12th accountancy afternoon video. So in this video we continue the same chapter, that is financial statement analysis. In the previous class we discussed about the meaning, definition, features, advantage, limitations of financial statement, and in this video we discuss about the meaning, definition, objectives, limitations, and various methods of financial statement analysis. Financial statement analysis is a comparison of the various items in the financial statement by establishing the evaluating relationship among them. So it gives a better understanding of the performance of and financial status of the business concerns. So financial statement analysis is one of the best tool in order to make a comparison of various items which are shown in the financial statement. It is more useful for the business organization in order to make a decision of concerned departments and concerned activities, and also take new policies, and it can be easily implemented in order to develop the business organizations. So it involves rearrangement of data in accordance with the purpose of analysis, application of financial tools, evaluating the relationship among the component parts, and drawing conclusion based on the analysis. Next, objectives of financial statement analysis. To analyze the profitability and earning capacity of the business concern, this financial statement analysis can be arranged. To study the long-term and short-term solvency of the business, and to determine the efficiency in operation and uses of the assets, and also to determine the efficiency of the management and the employee, and to determine the trend in sales and production, etc. And with the help of the financial statement analysis, it forecasts for future and prepare budgets, and to make inter-firm and intra-firm comparisons. So all these are most benefited while we make an financial statement analysis. Limitations of financial statement analysis. All the limitations of financial statement, such as ignoring non-monetary informations, ignoring price level changes, etc., are also applicable to financial statement analysis. And financial statement analysis is only the means and not an end. That is, it is only a tool in the hands of management and other shareholders. So interpretation of the results has to be done only by the financial analysis with due regard to the internal and external environmental factors. And this financial statement analysis, expert knowledge is required in analyzing the statement. So in order to make the financial statement analysis, a knowledgeable person only can make it, not an ordinary person. Interpretation of the analysis data involve personal judgment, as different experts may give different views. There are various types of financial statement analysis. Among them, the first one is comparative statement. It is a statement giving comparison of net income, net increase or decrease in the individual item of financial statements of 2 or more years of a business concern is called a comparative statement. So if a statement is prepared not to make compare whether increase or decrease of each and every items in the financial statement by taking 2 or more years, that type of statement is called comparative statement. It shows the actual figures at different periods of time, the increase or decrease in the figures that will make in absolute terms, and the percentage of such increase or decrease. So there are two types of comparative statement, that is comparative income statement and comparative balance sheet. Next, common size statement. The common size statement shows the relationship of various items with some common base and expressed as a percentage of the common base. So in the case of common size statement, the relationship between two items and also various items in the financial statement that can be made as a percentage with the common base is called as common size statement. The common bases are total of assets, or total of equity and liabilities, or revenue from operations. These items will be taken as a common base, and each and every item will be compared with these items in terms of percentage. So the common size statement include a common size income statement and common size balance sheet. In common size income statement, revenue from operations is termed as 100, and each and every expenses and income should be compared with the total revenue as a percentage. And in the case of common size balance sheet, the total asset and the total liabilities is taken as 100, and each and every assets and each and every liability will be compared with these assets and liabilities in terms of percentage. So by this way we can prepare common size income statement and common size balance sheet. Trend analysis. Trend refers to the tendency of movement. Trend analysis refers to the study of movement of figures over a period. So it is one of the movement of the amount from one year to another year. The trend may be increasing trend or decreasing trend or irregular. When data for more than 2 years are to be analyzed, it may be difficult to use comparative statements. So for this purpose, trend analysis may be used. So 1 year, generally the first year is taken as the base year. The figures of the base year are taken as 100, and the figures of the other years are expressed as a percentage to the base year, and the trend will be calculated. Fund flow analysis. The term fund refers to working capital. So working capital refers to the excess of current assets over current liability. That is, working capital is equal to current asset minus current liability. Excuse me. The term flow means movement and include both inflow and outflow. So fund flow analysis is concerned with the preparation of funds flow statement which shows the inflow, that is sources, and outflow applications of funds in a given period of time. And this fund flow analysis is useful for judging the credit worthiness of the business organization and also the financial planning and preparation of the budget. So the fund flow statement analysis is very useful for these purposes. Cash flows analysis. So cash flow analysis is concerned with the preparation of cash flow statement which shows the inflow and outflow of cash and cash equivalent in a given period of a time. So cash flow analysis is also called as cash flow statement, and this can be prepared how the cash are moved, whether inflow, that is sources, or outflow, that is application of cash or cash equivalent during a given period of a time. The movement of cash will be analyzed with the help of the cash flow statement. Cash include cash in hand and demand deposit with the bank. Cash equivalent denote short-term investments which can be realized easily within a short period of time without much loss in value. So cash flow statement helps in increasing the liquidity and solvency of a business concern. Now we discuss about the preparation of comparative statement. There are various steps to be followed, and a column should be maintained in order to prepare the comparative statement. It is a specimen for preparing comparative income statement or comparative balance sheet. The first column will be the particular column, that is, we should write the various items in this column. Year 1 and year 2, whatever the year given in the problem, you can write it. Absolute amount of increase or decrease, whether plus or minus, that should be shown in the fourth column. That is, we should compare the second year amount to the first year amount. Likewise, each and every item will be compare the second year amount to the first year amount, and you should write whether increase or decrease. If the amount is increase, means you can write plus the difference amount. If the amount is decrease, means you can write minus and the difference amount. So this fourth column will be the absolute amount of increase or a decrease in each and every items. Next, the last column will be the percentage of increase or decrease. So what the difference will arise by comparing each and every item by way of a second amount to the first amount, whether increase or decrease. The difference amount will be expressed in terms of percentage. Each and every item will be find out the difference, and in same way you can convert it into percentage. So it is a specimen of preparing comparative either income statement or balance sheet. So students, with that we conclude this video session, and you can go through all the points which are taught in this video. You can write it in your accounts unruled assignment notebook. Keep the notebook safely and bring it on which date the management will ask to bring the notebook to the school. You can bring it and send a task complete message in the group. In the next video we can discuss about the problems, comparative income statement and comparative balance sheet. Thank you.